Hello, my wonderful people. It's been so long, it's been a while, and this is a happy new year gift to you guys. So, today I'm not going to share any strategy, I'm just going to share one of my templates also, because these are some of the softwares that I've accumulated over a period of time, and I thought maybe it would help somebody. Personally, I do use them, but not independently, of course. I mix it with the price action, okay? But even if you follow the instructions that I'm going to give today, it will be beneficial in this sense of don't use it alone, or be strict with the instructions that I'm giving today. So you have two options. One of the options is, if you don't want to use it by itself, you can add price action, okay? If you don't want to use this template independently, you can add price action. Otherwise, if you want to use it independently as it is, follow these guidelines that I will be giving today. And part of what you're seeing on my screen is these arrows. It's a spike detector, and people sell it outside there, but for me, I give it for free in my Telegram channel. Yeah, I don't like taking advantage, so I'm giving this out for free. Why? Because there's no spike detector that works 100% correct. It works only if the trend is in favor, but if the trend is against you, it will never work, okay? Like you see now here, the arrow has appeared and it's supposed to spike, yet the arrow appeared maybe from around this area, so all through this far it's been dragging you down. So that is why I'm telling you, don't use it independently, okay? You have to add something else so that it can be beneficial to you. So this is the strategy that I'm sharing today. It's more or less like a template, and the instructions for this, if you don't want to add price action, use it as independently as it is. These are the rules, okay? Very clearly, these are the rules. The first spike, if a spike happens, like this is a boom template, and I will likewise be sharing a crash template, which is now this, okay? So for the boom template, back to where we were, these are the instructions. First of all, when a spike happens, it should give you this dull green color, okay? It should give you this dull green color, not this bright green color. This bright green color are you know, when they are small, or they are in well, they are not very strong, so it does not necessarily mean that a trend change. You understand? So you see now, like here, it was bright green, no trend change, 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 okay? So first is, it has to give you this dull green color for you to take notice of that spike, okay? Secondly, see if when the spike is happening, this other down one, you see, it's called dungeon. It is sort of MACD, but it's not MACD at the same time. These oscillators or the bars happen according to the strength of the market, okay? So you see, when this is bright green, still going down, bright green, still going down, bright green, still going down. From this end, you find these bars of the lower indicator are very long, followed by it was somehow reversing, faces up and then faces down again, but this time round it is small. So this minimum, like the movement of the oscillator strength from bigger to a smaller one, shows you that the trend is no longer is no longer strong in that direction. So if this first spike happens and it's already maybe showing color green, if it is not color green, it should be the oscillator here is smaller than the previous one. Take that note again. Okay, it should be the oscillator that is immediately after us is smaller than the previous one. Like you can see here, there is a divergence. Okay, you can clearly see this one is lower, this is higher, and this is so here we are coming down and here we are going up. This clearly shows you that the sellers are losing momentum and the buyers are picking. So the strength of the oscillator here is very weak and it can easily be broken. So first, let the oscillator in this indicator window be either slanting, be smaller than the previous one, or if it's even changed direction, the better for us. Okay, so a spike happens and the oscillator is either the one that was following is smaller than the previous one or has changed direction. Secondly, it should be dull, not bright as this. Thirdly, as it is coming, take note of this. And this moving average also, you're seeing the moving average that is following us. Okay, so this moving average gives us a it gives us sorry for that, it gives us indication like it has to have changed from red. So downtrend is red, you see here it's red, and uptrend is green. Okay, so it has to have changed from red to green. Okay, so a dull candle appears and our moving average has changed from red to green. Okay, so we should be under a green whatever. Thirdly, after this moving average has changed in color, look at the oscillators. Okay, so this second oscillator immediately after us should be smaller than the previous oscillator. Okay, this oscillator here should be smaller than this one here. So it means the strength is going now in our direction. So you can place your trade here. Okay, you can place your trade here around this area. Hope you understand. So anytime we are coming to touch this line, anytime we are coming to touch this moving average, that is where you place your trade. So where should you exit? You exit when you are placing a trade, you give it room to play. So you exit when you reach around this point. Okay, like the previous spike. If it passes this point without spiking, then you can exit it. That is for your entry. Okay, so it is a stop loss of around 5 to 6 candles around this point. You exit around this point. Okay, so if you had exited early and then it spikes again, you see it spikes again here, you come and enter again around the same area where they are meeting. Okay, and you still give it room again to come up to this point, the previous spike. Okay, so you will get this spike, and of course now you will get all these others that are following. So you just ride with the trend. How will you know where to exit? You will know where to exit at a point like this here, or like this here, or like this here. But you will have still gotten this spike. Unfortunately, you may have exited from here when it is crossing over again. That is your point of exit. Okay, that is your point of exit. And especially after seeing like you had this oscillator in your favor and then you had crossed down a bit. Yeah, you had crossed down a bit, and then another spike comes but gives us a small oscillator. Now this oscillator is smaller than this one, so you see like the trend now will be giving more way to the opposite direction. You see this oscillator here is smaller than this one, so the trend is now going against you. So what you're supposed to do at that time, you're supposed to exit. Okay, so you use this moving average to exit, or you use the oscillator also to exit. Okay, like it has spiked and the oscillator this time round is small than the previous one, so you use this to exit. Alternatively, this is how I always do it. I trade per candle. If you don't ride with the trend or you don't know how far it will go, so as it's coming to touch this moving average, you place your trade. As it's coming to touch, you place. As it's coming to touch, you place. As it's coming to so you close after like 2-3 candles, you close. As it's coming to touch again, you place. As it's coming to touch, you place. As it's coming to touch again, you place. As it's coming to touch here, you place. Okay, and when you place here and it drags you more than 5 candles, you close. Okay, if you place here and it drags you more than 5 candles, you close. In fact, you can put your stop loss to be like around 3 candles or so. Like from this point, you see, it was the first trade, 1, 2, 3. So you can say immediately you place your trade, and mostly you will only do this placing when it is touching, only if you've confirmed the trend. Okay, like we've put our initial trades here, and then it spiked in our favor. So as it is coming back now, that is when you will use to catch the spikes as it is coming back, the second and the third time. Okay, but you will not try to use it in such a scenario like here as we are going, or the trend is against you, you see. And another thing you need to note is that for here we've used the oscillators, but again you can use this moving average. If we've been going down for a while, like moving average has been red all through, the first spike that comes is always never very strong, so you can always ignore that. Maybe try to catch from the second one. But for me, I know the trend will go mostly in my favor if I have 2 oscillators, that one is bigger, one is smaller. So if I have 2 oscillators to compare, that is when I will know when the trend now is changing and it is going in my favor. Okay, so if you've been having red for long and fast spike comes, so the trend will never really go in your favor for long, so the trend will continue. See, smaller spikes are coming, so it is never even advisable to try and catch these spikes when the moving average is green, no, is red. Okay, don't try to, until at least when this spike will come, and you will come and look back and say this one was big and this one is small. Okay, this one was big and this one is small, and the first spike has come. Yes, it's still green, but when the second one came and it's turned to dull green, then you come and wait for it here. As it's touching, you place your trade. Okay, so this is how I use this template. When you are re-entering like the second or the third time, you have to put a stop loss of around, if you're re-entering from around this place. If you want to ride with a trend, just go and ride with a trend like for this initial setup, you come and exit as it is crossing. You close your trade as it is crossing back. Or if you want to be trading individual spikes, you will always place here. It spikes in your favor, you close. As you are heading back to this point, you can open your trade again. So there are 2 ways to trade this. Okay, so what I would tell you in this template is ignore the spike detector, but just use the oscillator and this moving average. This is not the normal moving average, this is a special moving average. Okay, so I'll be sharing this template for free. It is a premium product that I bought, but I'm sharing in my platform for free. Okay, I'm sharing in my platform for free. Something else to be keen about is you see this here is a dull one, so it comes a bright one, then a dull one. So when a dull one comes here and you find already like our oscillator was facing up, and the previous one was an oscillator that was facing up again, and the previous one is bigger than this one, our current one. So I would rather tell you to avoid this kind of setup. Okay, I would tell you to try and avoid this kind of setup and let another oscillator form. Okay, let another oscillator form and give you an opportunity to compare two oscillators that are facing the same direction. So if you want to trade going up, which is boom, let the oscillators be facing down, both of them, and you are able to compare like there's a divergence. So the peaks of the oscillators are not in line with what is happening on the main chart. Okay, and the former oscillator should be bigger than the current one. I hope you understand. So from there, it clearly tells you that we are now ready to change direction. Okay, so after this first spike here, and you find it is meeting your criteria, like the oscillator, this oscillator is bigger, this one is smaller, and the first spike that has come is dull in color, then come and get the second one as we are meeting the moving average, and just ride with the trend all through until when it will be ready to cross back. So I think I've thought the two sides, like you can ride with the trend, you catch this one spike, you close, you come and catch again, you close, you come and catch again, you close, you come and catch again, or you can choose to just ride with the trend as it is coming to cross back, you close your trades. You can choose whichever one that suits you. Okay, I'll not dictate what happens there. Come and check this other side. So a spike comes, it's a dull one, and when you come down here, you find there is no oscillator to compare, and even if you compare, this is very small and this is bigger. So it is against our rules of what we learned here. So you will not re-enter here because our oscillators are not aligning. Okay, so another spike again happens, and you see this oscillator here, and it's still one. You even don't have another to compare. Okay, so this one comes after this here, so this one. So you see this and this again are more or less like the same. So this gives you a notion of all these, they are more or less the same. Yeah, so this gives you a notion of arranging market. It's not going up, neither is it going, because you see the oscillators on top are smaller, the oscillators at the bottom are bigger, yet they are all like equal in size. So when it is ranging like this, I would rather try to avoid this strategy, because specifically we are trying to catch a moving trend. Our moving average is very suitable for a trend in our favor. So if the market is ranging like this, you will never be able to be profitable, because you will give yourself maybe stop loss of 5 candles, you close, again it spikes, you come and open here, you give yourself like 5 candles, so you will find yourself like more losing in such a setup. So if the oscillators are not in your favor, please don't do it. Let's come and check here. This oscillator is bigger than this, like our current oscillator is smaller than the former one. Okay, so it's going up, it's forming a divergence here, and you see here, okay, it's forming a divergence. So immediately you see that, and the first spike comes which changes color, you can come and place it here or wait for it here. Okay, so when you place here and it doesn't spike, immediately come and wait for it down here. So immediately it goes past this point here, make sure you close your trade. Okay, make sure you close your trade, and then wait for it to spike again. As it's coming to touch, you open, and then now you ride with the trend. Okay, so that's it for this tutorial. It's not really a tutorial, it's just a strategy that I'm sharing, and this is a boom 500. So let's check. No, the boom 1000. Yes, this is boom 1000. Now I need to mention something. The boom 1000s tend not to really work well with this kind of setup. I needed to share that so that you'll be keen. You will know how to trade the 1000s if you want to use this strategy. Okay, because you see here, yes, in such a setup, because we have two oscillators to compare, and unfortunately even the oscillators were of the same size. Yeah, so it was not really giving you a clear indication. Yeah, so it comes and it continues. Well, the 1000 really is never very good pair to trade with this kind of setup, you see, because even the oscillators are like ranging, not really giving you a proper setup when it wants to change direction, you see, except in this kind of scenario, like you have a few points where it is congested here, and you see our oscillator even is more even confusing. So I needed to make that point clear, like the 1000 might not be able to follow your rules very well, so trade very wisely using the 1000. Okay, and you see, like here it was trending for so long in opposite direction, so even the oscillator didn't break for you to get an example to compare. Okay, and then from there it just started spiking and going up immediately. Okay, so maybe if you would want to come and catch it, it's the second part here, after this big oscillator and the small oscillator, that you can compare. So after this first spike, then you can continue catching the rest, but at least you've seen the difference between the 500 and the 1000. Let's check again crash 1000. So this is crash 1000. Crash 1000 somehow is a bit different from boom 1000. Yeah, in this kind of setup, you see here very long, and then small. So after the first spike, and in this the boom, the crashes, there is bright red and then there is pink. Okay, there is the bright red and then there is pink. So if it is bright red, you ignore, but if it is pink, then you come and check the oscillator. So if there are two oscillators, our current one is smaller, the former is bigger, and the spike that has come is pink in color, then come and ride with it. Okay, come and ride with it. Check this setup again here. So it's a bigger oscillator and then a smaller oscillator, but it does not go in your favor. You understand why it does not go in your favor? Because our general trend was an uptrend. You know, the 1000s tend to range very strongly, like they go in the trend direction trend very strongly. Okay, so if this scenario happens, just give yourself like stop loss of around 5 candles or around this point. Don't pass this point. If it doesn't spike, then exit. If it doesn't spike, then exit. Okay, so just to be on the safe side, this setup here, a bigger one and a smaller one, though it didn't break completely down, but at least you can see like this side of the oscillator is smaller and this side is bigger. So immediately this one came, you can catch 2 more. Yeah, you can catch 2 more. In fact, you are supposed even to catch from here, the second one. So all this you roll in trend, and even this one here. Why? This one is smaller than all of this. Yeah, so this one is smaller. What it means is that if the current one is smaller, you will also come to the main chart, you will find that where it is now spiking is lower than the former high. You see, this one is lower than here and this one is lower than here. So it tells you like the levels up here have not been broken. Our resistances on top have not been broken. Okay, so if our resistances on top have not been broken, it means we are still going down. Okay, so you find this one is lower, this is higher, this is even more higher, and this one here is even more higher. So it will tell you that this oscillator here does not have more strength like here. It spiked early, and if it spiked early, so you will find that we do not have the enough strength to resist the opposite pressure that is coming from sellers. Okay, So immediately the first spike happens here, then just come and ride with the trend again, because this oscillator here is smaller than this one here. So just come and ride with the trend. Okay, but again, do the 1000s with some wisdom, and you know, just apply wisdom. Okay, so this one here and this one here, bigger, smaller. So you expected this one here. Of course, it put you like a few candles on lows, but eventually it came. You see, if it crosses the former that you knew, like here, check again like the previous one, which is here. If it is like less than 5 candles away, wait for it. Okay, if it is like less than 5 candles away, wait for it. It will surely come. So it came, and when it came, the oscillator that it formed down here is even more smaller. Okay, so another, we wait for another one. And if you are to trade one spike and close, so maybe you would have re-entered around this place and it took you out, and then another one came. Yeah, another one came. So how do you know where to exit? Exit when the oscillator has become full, or exit if or when the oscillator has become full at the bottom against you, or if we've passed the former level of spike, which was now supposed to be this level, because this level here is very far. This one here, it's very far. Okay, no, where were we? I can't, yeah, I think it was here. Not really, not really. Yeah, I was saying you can exit if the oscillator here, the bars have become full and it's reached on top. Okay, and you've passed the previous point of spiking, and probably the next one is a bit longer, so you can close and wait for a trend again to start, and then come and check your oscillator. If your oscillator here is smaller than the previous one, so it tells you that the trend is really not very strong, so you can come and ride and come down with it. Okay, so take the 1000s with a pinch of salt, but this strategy works very well with the 500s. Okay, so that's it, guys. If you need this template, join our Telegram channel. I'm sharing it for free there, because I believe sharing is caring. God bless you, and bye bye.